So let us start with the total market cap. And on the weekly, we can see not only how significant these weekly closes have been, I want to tell you the big level that we have now taken out on the weekly, and we have tested it as support and moved up even further for 2 weeks, which is this weekly block right here. This weekly block has held the market down for almost 2 years. And why is this block so significant? Because this is the block that went on to break this market structure right here and make the lows that we got in December 2018. So you can see we came up for the first time 2019, got rejected at the weekly block, came back down. 2020 winter, we in fact did not even come up all the way, but if you look at the block, it is still the block that was rejecting price. And then 2 weeks ago, we came up, not only challenged the weekly block, we did end up closing. Just on a closing basis, we had closed higher, than the weekly block. But if you see, we had not completely closed over the wick. So if I just draw out the wick for this block, so you can see we had not closed over the wick. And last week and this previous week, we have made these weekly closes. For this continuation, we have turned this weekly level into support. So any kind of drawdowns and any kind of drops, this is going to become a very significant level. Very quickly, I'm just going to remove this quarterly. And what I'll do is I'll just build this block. So as support, this was what was previously resistance. Any kind of drops below, this is the area that should now find big support. So anybody who is looking for any kind of downside on this market, which at this point just seems absurd, because last week and the week before, what we were doing was we were mapping out targets already. We were mapping out targets in the first week of July itself, because this is essentially the first base that we broke out of. Alright, so we mapped out a target for this base, and if you can look closely, there is another base right here. So this is the second base for the market, that we are close to the upper edge of the base. So even in terms of resistance, I think it's actually much cleaner on BTC, so we will look at it. But nonetheless, I would say that this top right here, this can be considered something that would build this base. So above this significantly, we will get another impulse. But outside of that, we want to look at the daily, because we are approaching this 381 monthly. For now, I would say the biggest and most significant resistance we have broken above. Alright, but what we've been doing since we got that massive correction on the 2nd of August, since then we have just been grinding up, because the market is just so bullish, guys. Like this is supposed to be a consolidation, like price is supposed to break up above major resistance and consolidate. But since technically it has broken up above such a big base and there is so much momentum, all we can see is just buying, just constant buying, and this is just carrying on. And what this is doing is, we're looking at the RSI over here, and you can see that this entire while that price is grinding up, momentum is dwindling. So we had the peak of the momentum at the starting of this month, and since then on dwindling momentum, we have been moving up. So what you have to understand is that it is now very strong. Okay, this is the daily time frame, and the RSI is like, it's hitting 90. It crossed 90, in fact 90, 91. So at these levels of RSI, if you are finding divergences, these are not signals to short. but these are signals to be taking profit, to be securing what we have secured in these moves. You secure them. There is potential that the reset is very weak, and the drop is very mild, and then you do get continuation. You can always compound back later, but if somehow the trade gets too crowded, there is too many longs to liquidate, we can get a deeper correction, and if people are just increasing the exposure as we are going up with divergences, they're doing this wrong, so you need to understand that once you are moving towards a resistance, price is diverging, just take profits, take some off the table, pay yourself, have cash with you to buy, whenever the next dip comes. Because now the strategy is just to start to take profits when you hit major resistances, start to take profits when you see major divergences on your momentum, and then just raise money for whenever you would find the next good broad market risk adjusted opportunity. So for now you can see that we have been diverging on the daily time frame. The market has been diverging, and just look at this grind, no wonder. And essentially, if somebody has been trying to aggressively short this, looking and finding for some levels, this is not a market to short, guys. You can take profits, you can find places to hedge, but you just have to understand that we can continue this grind. This can grind up all the way to some kind of significant resistance, or essentially this is where the market is going to, at least from what I understand, until we prove otherwise, where we get another strong impulse. I do not see if these are the strong conditions for that impulse yet. If we are to continue to grind, get at one of the resistance levels, you can get that move down. And for now, this is that grind on the 4 hour. So whenever it is we do end up getting that weakness, it is possible that we get another move down, build out a structure, and then try to move again. Reset the oscillators, reset the momentum. The funding is already quite extremely positive in some of the alts, so people have been sitting on paying a lot of funding for their longs, but price is not doing what it should be. Because when we do end up getting impulsive, this is the kind of price action you see. Price is moving up, like with time and with price. This is what an impulse is. But this is a grind. It can be a ramp. I would say if we go to the other side of this, or at least get above this monthly and start looking strong, you can do that. But for now, if you're not in here from below, and you don't have your stops, like I would probably have my stops below this level for some higher time frame trades, but if you're not in from below, and this is where you're trying to catch along for upside, there is potential for the market to punish you for it. Because no matter how bullish the market is, it is always prudent to find good places to manage risk. This looks more like somewhere where you would be, in FOMO. This is a place where this reflects a fear of missing out. This slow grind over the last 3 or 4 days, this reflects. And essentially what else is there is that your stronger movers, Ethereum has been the leader, for this move up since the 20th of July. Ethereum has been the leader, and over the last 3 to 4 days, we're seeing weakness. When you're seeing weakness in your leaders, then it is a time for caution. There are individual plays all over the place, but the broad market, this is what it is calling for. It is a grind. Momentum is reducing. We are grinding into support. We're heading into grinding into resistance, and quite clearly you can see this channel. The middle of this channel is just not being taken out easily, So it is a time for caution. It's a time to have taken profits, to manage your risk. Keep cash in hand for the next dip. And this looks inviting. This is quite a nice level. I'll draw it out on the 4 hour. This is a nice flip on the 4 hour. It's a nice pivot. So if we are to drop, this would look inviting. It's a nice confluence. Can pull out a fib. I don't want to pull out a fib right now because I don't know how long this grind can last, but yeah, it's pretty decent. We're getting somewhere close to the 0.5 and between the 0.5 and the GP. So this looks like a very nice place for confluence. We have the trio of VWAPs that are also coming up and heading into this level. So any kind of selling down here and into these levels would be very attractive for a buy. So this is the outlook on. Here's the altcoin market cap chart, and what you can see is absolutely spectacular because the big resistance levels have absolutely dissipated for the altcoin market cap. This is essentially all the levels that were of any kind of significance, and you can see we have broken up above them. So on the monthly, the next significant resistance is this 224 225 level on the monthly time frame. So until we have quite a significant potential move, this is a 50% move, guys, which is not very far away. I mean, I think right now it is a quick bull trap, but this 50% move on the altcoin market cap is not far away. Just look at this chart. It's such a clean breakout from this double bottom, if you want to call it that. We look at the weekly to give us slightly clearer picture on what this looks like. So we still had this base that we had drawn out, not yet at its target. And for the altcoin market cap, forgive me, but I did say 225 is a big level on a monthly time frame. What I would say is this 192 is also a very significant level. Again, like the total market cap, this is the level that broke market structure. This is the block, because BTC has made a stronger move already, guys. So this is odds catching up. Odds have been trying to catch up since a long time, and after 3 years of that downtrend, this is where they are trying to catch up. So here is your big resistance. This is significant. This block is significant. It should get a decent reaction. Also, it is the target for this base that we had drawn out. So this is the base we had drawn out. I'm sorry, but I don't think I should have all these levels below for now. I do like if the chart is cleaner. Just some significant levels are needed for now below. But nonetheless, what a absolutely brilliant move we've had. There is no reason to believe that there is something that would pull this market back as of now. You can see that, of course, another reason why we are getting that kind of choppy grind in this area is, so you can just look at the zone. This has had some pretty decent reaction. This 144 to about 150 level, it has had some pretty decent reactions previously. So this is another reason we are getting this bit of a grind after the strong impulses that we have had over the last month. So again, it is a similar strategy. There is resistance on the total market cap, but for the altcoin market cap, there's not much to say, guys. This is looking so strong. This is it has just been going. We made another consolidation. We did end up flipping that resistance into support. It's slightly stronger than the total market cap because we have bit those divergences, but now I think for the altcoin market cap, at least on the daily, we can say that one of the divergences has been negated, because you have a higher high in price and also a higher high on the RSI. So that is something significant and something of note. There is a resistance level, there is a resistance zone right here. So it is still prudent to be taking profits because total market cap also suggests so. But I would say the big level for this market right now, it is still another 25 to 30% higher. So that is something you need to keep in mind. I mean, uh, you do take profits, but do not, you know, do not decide for the market. Allow the market to decide when it has to make that pullback, and which just means that you should be riding these moves with your stops. Keep your stops up in profit, find the resistance levels, and allow price to decide what it has to do. So for the altcoin market cap, if like the total market cap, we are to get some kind of a reset, this is the 7 to 8%. I mean, either around this quarterly level, but pretty close to this VWAP. We can pull out, I think, another VWAP from here, which will show where price is getting supported. I think right now where price is getting supported would be pretty aggressive. Yeah, this is pretty aggressive, guys. And there is nothing to define, and there's nothing to say that this cannot and will not carry on, because as I said before, the big resistance level is still quite a bit higher. So still, because we have that resistance on total market cap, just keep a lookout. But there's so many strong plays for altcoins right now. If you're not in our Discord already, I did mention it yesterday and day before. EOS, LTC, TRX, these have been the stronger plays after Ethereum has shown some kind of weakness. TRX has already made another move today, another 6 to 7% move today. So individual plays are still there. It's just the big one, Ethereum, is still, I mean, consolidating again. It is slightly weaker. Let's have a look at our channel. Our channel is looking pretty clean over here. It's still reflecting that this is good, guys, for now. Just found support on the VWAP and the channel, and trying to do something. Next resistance levels, apart from what we have horizontally over here, still another 20%. So just keep a lookout. Just keep a lookout for the structures. Always look and find places to manage risk. Over here, the next place, if we do get a drop, is the middle of the channel, and if we are to drop further, then it is the bottom of the channel, which is again in confluence with the quarterly level and also the lower VWAP. So here are your support zones for the altcoin market cap. Here's Bitcoin, and just a quick reminder and a quick glance at the monthly, just for a look at the previous monthly. And last month's candle, how significant it was, the second highest monthly close of all time for BTC. And what we did this month is we have tested this 1768 quarterly level. It has been tested right at the beginning of the month, and since then we have been consolidating above. Let's have a look at the weekly. I just want to show you the weekly so we can look at why we are stalling over here in terms of price. So we are above this significant weekly level right here, which was I would say about 11,750, which held down the market once, twice, thrice. And if you look very clearly, this is the base on BTC, this weekly level right here. Okay, so when we have this weekly level drawn out, which we are currently breaking up above, I'm just going to move this for a second and delete this POC. So we have this base. It's a very clean base. You can see on a closing basis, we did not get any weekly closes until last week. This previous week we have closed above this. So that is so significant because it gives us a very clean technical target on Bitcoin. And what do you know it? This technical target takes us to all-time highs. So it's a very clean technical target. It is significant. It is valid. look at the volume. You just look at the volume. This is a volume index, so you just look at the volume. The volume is significant. This 27 July move, it was very nice. Last couple of weeks also the volume has been good. The previous week we have had greater than the last 60-day average volume, which has been significantly higher, because we did get this very massive drop and rise, which has raised the average volume. So the volume has been good. It is not impulsive, so you have to understand this is still consolidative in nature, because we've had that breakout, but it's not impulsive. It can be that the first move out can be a bit of a shakeout and drop back in, create some kind of confusion and move. But this is a very clean base. It is significant. I think it is valid, and we have a brilliant technical target outside of this. So what we want to look at is the daily. So yeah, on the daily and even on the weekly, what I was showing you is we have quite a set of resistances right here. This 2018, 2019, we built some levels 2000 to 12,000 to 12,800, around about here on the daily time frame here. This is the 12,800 level right here. You can see that in the previous run, what a nice reaction we did end up getting from this level. Here you go. So it's a very clean SR flip right here on this 12,800 level. Support, tested it as resistance, and bam, we got a straight strong move all the way to 6,000. So how good a level is, it is defined by the magnitude of the move. I mean, in terms of recency, it is not so recent, but in terms of its magnitude, this was a very powerful move that we got after this retest of this level. So we are close to these 12,000 to 12,800. There's 2 or 3 daily levels up here, so I'm not so surprised that price is kind of stalling and grinding a bit around these levels. Another thing with volume, you can see last couple of days we have been moving up on declining volume. So moving up onto resistance with declining momentum, declining volume, that is something that is significant. Here you can look at the RSI. So we have been declining since the August top, and essentially the daily close right here, you can see just on a closing basis, it's a slight div, but it is there, and the momentum is pretty low, volume is declining. This is, just caution, guys. We break up above this, get a daily close above this, it is likely 12,300. 12,300 is the next significant level, and beyond that it's 12,800. So right now I think you should be cautious, longing right into resistance when momentum is low. Again, it is something that is not hard for the market to punish, no matter how bullish the market is. So that is something to look out for. Apart from that, let's quickly, I want to show you something else. So we have a channel here. I just want to show you the significance of channels, and how nicely these work. And sometimes if you know channels, you use them correctly. You should also know very well respected channels tend to go forward and continue to get respected. So these are some channels from June, from the drop on June. You can see once we broke down below how well they were respected as resistance. As soon as we got up above middle of the channel, top of this channel, top of the next channel as well, and the middle of the channel, see how well these levels are being respected. But once we ended up breaking above, finding support on the top of the channel, we moved up, and what did we do? We kept on using it as support right here. So what I would say is that if there is to be another drop, if there is to be another test, the channel right here is going to give some kind of a significant reaction I want to see what the VWAPs on this volume look like. See, they're pretty close to where the channel would end up being. So if there is to be some kind of a drop, this is the zone I would be looking at. Let me just pull out the fibs. It lines up perfectly with the golden pocket. So I would say 11,400 to 11,450, around this zone. It's a very nice level to, if price does end up coming down, to end up managing risk. If not, then you gotta wait for that breakout and still just take it level to level, because essentially what we had to do was catch moves here. For now, this is not the place to be longing, but you should be long from here. This is where we were catching BTC. In the Discord, there were some of us who ended up catching it again over here. So this is where you were compounding, this is where you were taking profit, and you're having stops in profit and allowing price to do what it has to. But for now, like I showed you, there are divergences. That does not mean that this market is over, this market is bearish, anything like that. All it means is that yes, end up taking profit, keep some bank to buy the next dip. You can compound and allow price to move on. Another thing I want to quickly mention outside of that has to do with supply and demand. And what we have right here is a daily demand that is formed, and you can see very clearly, until this demand is taken out, there is no bearish case for BTC. Like, there actually isn't. Every demand that is being formed currently, it is getting good reactions. It is just a quick daily demand, test, successful, we moved up again. So if we are to come back down, I'm saying it is possible we're not even going to test the daily demand. And this daily level up here, 11,376, which matches up with the GP and the levels that we were looking at, along with the channel. And this is sure to again find some kind of demand, if prices to do that. So these are the significant levels. I would say 11,376, along with this VWAP, along with the golden pocket, it is significant in case price has to come back down once more, which would be the case if it is too heavy. This is not something for us to decide, guys. The market is just trying to corner people, and the thing is, this is quite obvious. What is obvious now is also what is dangerous. Sometimes the market can use it against. What is obvious is we have shifted. We are in a long-term strong trend, but still, no matter how strong it is, it gives nobody a reason to buy into resistance, because then that is what the potential for the market is. It can still make another move down, build another quick shakeout before moving up. So a lot of things that prove we are very strongly in that market. I have told you the base that we have broken, the target for that base, and now if there is potentially another dip to come where we can catch it. If not, then if you're not in, I would say it's pretty complex, because we have a series of resistances all the way up to 12,800. So it is pretty complex to not be in right now and create some kind of FOMO. I would say you need to be careful and just learn that as a lesson, guys. No matter how strong the market is, just learn it as a lesson. Buy on the dips, do not buy at resistance. Here's a chart I quickly wanted to show you, which I find very significant. What we have is silver in red and green, and we have Bitcoin in blue and white, and we have the inverted dollar index in orange. And what you can see is that basically what we are getting is a repricing in all these assets in relation to the dollar. There you can see the entire dollar dump. This is basically the dollar losing value, and all of that value is flowing into metals, into other assets, and Bitcoin is another rare commodity. I mean, that is essentially how some define it. though many would not want to have some kind of a definition. But nonetheless, it's an asset, and currently all we're getting is a repricing in the different assets according to the dollar. And what you can see is that the dollar has kind of been basing out. It has been holding a certain level, which is kind of capping out the all the other assets, including Bitcoin. So what I would say is that it is as important to be watching the dollar as it is to be watching Bitcoin. And of course, if you are trading metals as well, because they are in such a brilliant trend, there is no reason to not be trading those as well. It is all about the dollar, guys. And if the dollar is starting to gain strength, it's still going to get some kind of a bounce, then you should be looking to adjust your risk accordingly. So I would say this is a very significant ratio, it's a very significant relationship to continue to track, and I would suggest you keep on tracking it, keep half an eye on this. And at least for me, I do watch this quite significantly, if not more than once, but at least once a day, just to look at what the dollar is doing and what is potentially possible. Currently, what I would say is that there is a triple top which is kind of getting built on the dollar. So just keep a lookout, keep half an eye there, because if this does start to drop, which means the dollar starts to rise, we can get that slight correction that we were looking for as a potential, since there is too much FOMO up here. But if the dollar breaks down, I would say that there is enough impetus and there is enough higher time frame momentum for this to carry on and take out some more resistance levels. So it is so dependent on another asset. This negative correlation with the dollar is very strong on Bitcoin. So just have a look at, guys. This is important. It's a quick look at altcoin dominance, and what you can see is we made this higher high, higher low, and a higher high. It was a confirmed uptrend. We built this confirmed uptrend after a big downtrend of 900 days. And what we have done is we made another consolidation of about 300 days that we have broken up above. We did this on about the 6th or 7th of July. We retested it on the 20th. And what we're doing now is the first impulse from outside of it. Currently heading to this trend line, which can give some kind of a reaction. But in terms of horizontal levels, it is this 44 level that is significant. So I would say that there is another 6 to 8% before we have some kind of a significant level. Beyond that, the next level we have is close to 50, so that is about 20% away. So this is the time to really be looking at altcoins. Most of them are very strong trends, not only against the dollar but also against BTC. And this will carry on until Bitcoin really gets impulsive. I would say that is only after Bitcoin crosses 14,000 is when Bitcoin will get impulsive. And that is when we can see some kind of a sideways or a correction in alt BTC. But until then, this is the time for alts, guys. And this is the time to be paying attention to alts, buying the dips on alts, and charting out the strength. There is strength across the board. There is strength in the narrative of DeFi. You should be on Uniswap. If you're not, you should be looking at the coins which have decent pumpermentals. It's not even fundamentals that I call it, which have good market makers, which have low supply, which have a good narrative, which have strong money behind it. I mean, all of this is something that can help you, but essentially just technical analysis is going to be working well. Your patterns are going to be working well. Your momentum is going to be working well. So this is the environment. It's something that has reappeared in crypto after 3 years. So you should be making the absolute most of it. And congrats for sticking around. And it must be quite encouraging to be able to experience an uptrend in this market after such a long time. For traditional markets, we're just going to look at a couple of things. One I want to tell you is that transports are doing pretty well, which means outdoors stocks are doing currently better than the stay-at-home stocks. So that kind of reflects to you what the situation with the virus is. But apart from that, what we are looking at, and this we have seen before, is the correlation and the similarities with the 2009 low. And what we had done is we had actually plotted this out. We were looking for this dip over the last I would say somewhere between mid-July and mid-August, but you can see we did not get this dip. But what you want to understand is, once the low has been formed, even in 2009, you can see what prices did. We did this slow grind up, and basically it didn't get a proper correction for at least a year and a half, before we got a proper correction. So this is something you need to keep in mind, just in terms of, this is the breadth down here, the market breadth, and you can see the market breadth is also similar, which is looking healthy. There is divergences, and of course divergences always appear in trending markets. But just like I was telling you about Bitcoin, this doesn't necessarily mean that this is the end of it. And in terms of seasonality, July, August, September, pre-presidential years, they are still decent and they have decent strength. It is October generally that has some kind of a sell-off, so we are still a couple of months away from that. But in general terms, I would say that there is a lot of rotation going on in stocks, so you should be looking at transports. Small caps have been doing well, and a lot of times most of the other markets are in chop. The indexes, especially the NAS, is looking choppy, but there's no definitive way to say that something is topped out or we look for a big correction. But I just wanted to show you this analog with 2009 and how well price has been moving along with it. So we are essentially pretty close to all-time highs on the S&P 500 as well, and we have the same kind of structure and sentiment, guys, and the market breadth is similar too. So what I would say is, as I have been saying before, just keep your bias out, allow the trend to play out, play the trend until it proves itself otherwise. And I think that should remain your mantra. Forget about what is happening around you. Don't allow it to create any kind of bias, and just find the strength, because if you're trading this market right now, there is still strength somewhere currently. Like I told you, it's small caps and transports. So just have a look at that and understand that this metric and something I'm just going to show you right after, it is still proving itself that there is no need to panic, and there is no need to project that we're supposed to get some kind of big correction across the boards, because the statistics are not showing this. So talking about statistics, here we have another set of very important statistics, and this is really positive. This was the greatest 100-day rally ever. Alright, this is the greatest 100-day rally ever, of whopping 50% at 0.5% a day we have done since March on the S&P 500. And what is to note is the past big rallies have led to continued strength. You have to understand this. I do keep showing you statistics like this every 2 or 3 weeks, and here is another one. And just look at, in 12 months, look at how many times we've had a positive gain after having a greater than 22%. This is just greater than 22% rally 94% of the time. So this is so significant, guys. This is all the statistics we have. This is the numbers, and this is what the numbers are showing us. that expect continued strength, expect this to carry on, and just look at the positive gains that we've had over the next few months. Look at the positive gains that we have had. The 3-month is something that you need to look at, and you see that there's 77.8%, and essentially the only negative we had is in 1987. Okay, so this is something you need to keep in mind. Just look at what price was doing in 1987. You can find one other potential, what one other potential scenario might be, but just look at what all the other potential scenarios say. They all say that this can just continue to chop and grind and carry on, keep people out for as long as possible. Everybody who's looking at the fundamentals is just sitting out in cash, guys. So you just know what it is. It is the people who do not understand the fundamentals of the market. It is the degens, like we call them. They are the people who are making money in this market because they do not have this bias. They are not basing the decisions on any kind of bias. They essentially just have a bullish bias now, which is maybe dangerous, but we have to allow the market to tell us otherwise. You cannot not have a bullish bias in this kind of a market that is making higher highs and higher lows. Until it is doing that, this is what as a technical analyst, and you have to allow the market to prove you otherwise to switch your bias. So I think it's reasonable to have a bullish bias even if you are a technical analyst. But you have more statistics here, guys, to show you the potential moving forward. Taking a quick look at lumber right now, and basically what I had told you is as soon as we did end up breaking above this monthly level, to start looking for further upside, because this was going to all-time highs, and this is what we were talking about right at the weekly review. And what I want to tell you is that from the weekly review that we did, sorry I did not do one last week, I had some in real life things to do, but we've basically been up about 25. Even now we're about 23%, but the highs are about 25 to 26% from when I notified you for the second time. We have played 2 legs on lumber. One was a 30% move, and the second one has been about a 25 to 26% move. So congratulations if you got it. It is all about playing trends, guys. I am telling you, these trends do not emerge every day. Just look at this. This is what you're seeing is the last 20 years. Just look at how parabolic prices. Why would you not want to play this? You do know you can play this on options. You can make more gains than what you do end up making even trading altcoins on spot. So you should understand that, and you should know that you can take these opportunities and make the most of them. And if any of you did, congratulations, well done. Lumber is at all-time highs, and it is in price discovery. So that is that. There is not much more to say than it is in price discovery. Find structures, watch where price gets to, and buy the dip. So while gold and silver consolidating, here's another commodity that has started to initiate and look strong, which is nat gas. Nat gas has taken out one major level, this quarterly level, and what I would say is what you would want is for price to get above this yearly 2.9. Once we can get above this 2.9, I think there is significant upside to this. And for now, you can still play it level to level. If you do get a retest of this quarterly level, you can play it up to the yearly. And once we're above the yearly, finding support, we can be looking up at further targets. But it is, again, something that has found strength over the last couple of weeks, and it should be on your radar. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!